Hi there, Shingirai here again with another update on portfolio performance over the past week. On a one-week basis, all 10 of the CBAM portfolios outperformed their respective benchmarks in a relatively risk-on week, where we saw 8 out of 10 of our top performers, respectively being equity positions up more than 3% on the one-week basis. And we also saw a strong return there from Chinese equity markets, with the 3 positions across Bailey Gifford, Columbia Threadneedle, and HSBC MSCI China up more than 5%. And that's on the back of some headlines there for some more fiscal stimulus coming out of Beijing. Despite some improvement as well from manufacturing PMI, they've also decided to lower down payments for first-time home purchases in order to support that property market, which has been under pressure, which represents about 30% of Chinese GDP. And then looking at detractors from performance, we saw our global sort of fixed income positions across M&G global bonds, emerging market bonds, and LNG all stocks gilts, all down more than 0.2% on the one-week basis, as bets really continued to come in that central banks hadn't quite finished their business of interest rate hikes, and obviously affecting the longer dated duration sort of government bonds in the portfolio. To start off the week last week, we did see a UK bank holiday, and then we did see some encouraging signs which would probably explain some of the risk-on sentiment coming out of the US jobs data where we saw the bit of weakness beginning to emerge in terms of the US jobs market, and we saw a softer GDP than expected for the second quarter in the United States, up 2.1% versus an expectation of 2.2% for the second quarter of the year. And finally, the Fed's sort of favorite indicator of inflation came in line with expectations, and that was seen as a relatively risk-on signal for the markets last week. Looking at a quarter-to-date basis, 5 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from CBAM 1 returning 0.45% up to CBAM 5 V2 returning 1.11%. And again, we continue to see that narrative of a recovery somewhat on a quarter-to-date basis for Chinese equity positions, with those positions being our top 2 performers across HSBC and Columbia Threadneedle up more than 4%, and then a bit of strength for our thematic positions there, with the EF 8am Global Fund up more than 3.4%. And then just switching over to some headwinds, we did see Allianz retreat, Continental European Equity retreat 3%, alongside those longer dated government bonds across the M&G Global Government Bond and the Japan Government Bond down more than 2.2%. Coming into this week, we did see a US bank holiday, alongside also some data coming out of labor market indicating lower labor costs. Despite some inflation we continue to see in PMI data, and also initial jobless claims this week slightly weaker. Then looking at China, we got services PMI coming in a bit softer, despite that improvement in trade balance, spooking out Asian markets there. And then European GDP was lower than expectations on a quarter-on-quarter basis this week as well.